Hi, this is Chris from thetraderguy.com taking a look at the upcoming 20th of June. This is the Swiss franc Japanese yen currency pair. Daily chart, as you can see, I have a Fibonacci drawn from the move down as an idea of how things could play out. I've got the 50 and the 200-day moving average. And as we start to wrap up the session here, in the New York session, we are forming a hammer, which is preceded by a shooting star, most admittedly. So, what this suggests is that we are going to get a bit of consolidation. However, that's a shorter term outlook. Here above 111, if we break the top of the shooting star, we more than likely will continue to climb to 112.25 or so. This could be very interesting because for me, it looks like we are at least trying to form some type of bottoming pattern. And we're seeing this throughout the Japanese yen pairs right now. There's a lot of different ways to look at this, but I do think that there's a shorter term smash and grab trade to the 112. 25-ish area, which is a 38.2% Fibonacci retracement level. If we break above there, we could work our way towards 113.5. So I think that might be what happens. However, the alternate scenario, of course, is that we break down through the hammer, which is a very negative sign. And at that point, I would anticipate that we would probably fall towards 109. So you can look at it basically like this. You can draw a box on both of these candles and just trade in whichever direction. Look for the next support or resistance area. Aim for that initially, and if we go beyond there, in the case of buyers, like I said, we'll probably go to the 50% Fibonacci retracement level. You can see that there was some support there. If we break down, then the next place to look is probably the psychologically important 108 handle. This is a pair that does not move very quickly, but that's part of the appeal of it. It is a slow moving trade between a couple of safety currencies. We have seen a sell off in the Japanese yen as the Americans came to work. Might have been a bit of an overreaction to the trade tariffs in Asia. So I think this could represent an opportunity. Another way to look at this is to simply look at it as a line chart. And as I zoom in on the line chart, you can see that we are at least trying to make higher lows. So with that in mind, I think that we may have an opportunity here, but there is a lot of volatility. We've got some very obvious levels that we can pay attention to give us a guideline, but it looks like we could have a nice trade.